All right, everybody, welcome back for another deep dive. You know what I love about this one? This whole idea of building wealth and passive income. Like, who doesn't want their money to work for them?
It's the dream, right?
It really is. And,
Yeah.
I've heard about dividends and compound interest, but honestly, I haven't really wrapped my head around it all.
Yeah, it can seem a bit like, well, a bit intimidating at first.
For sure, for sure. But this source, you shared this financial expert, they seem to really break it down.
They do, they do. And one of the first things they emphasize is that this isn't some get-rich-quick scheme. It's about taking a long-term approach to investing, building wealth gradually over time.
Okay, so patience is key.
Yeah.
I can get behind that. But how does it actually work? I mean, where does this whole passive income thing come in?
Well, imagine this. You own stock in a company that pays dividends. You're essentially getting a cut of their profits, usually every quarter. Now, here's where it gets exciting. Those dividends can automatically buy you more shares, which then generate more dividends, like a snowball effect.
Wait, so you're saying your money is literally making you more money without you having to lift a finger?
Exactly. That's the beauty of compound interest.
Hmm,
Over time, those small gains really start to add up.
that's wild. Yeah. Okay, so let's talk strategy then. I mean, how do you actually put this into practice?
Well, the source points to a few companies with a solid track record of paying and increasing dividends. Shell, AbbVie, Apple. These aren't just random companies, they have a history of consistent growth.
Right. So it's not just about chasing the highest yield, it's about finding companies that are in it for the long haul.
Uh,
But how do you know? Like, how do you even begin to evaluate a company's dividend potential?
That's where things like dividend yield come in. It's basically a measure of how much cash a company pays out in dividends each year relative to its share price. Higher yield can mean greater potential for income, but it can also signal higher risk.
So there's always a trade-off. Got to
Right.
find that balance between risk and reward.
Exactly, and that's why diversification is so crucial. The source really hammers this home. Don't put all your eggs in one basket. Spread your investments across different companies, industries, maybe even different asset classes altogether.
So real estate, you're saying, could be a good complement to dividend-paying stocks.
Absolutely. It's about building a resilient portfolio that can weather market ups and downs.
Makes sense. So what's the biggest takeaway here? If someone wants to explore this whole dividend investing thing, where should they start?
I think the most important thing is to approach it with a long-term mindset. Don't expect to get rich quick. It's about making smart, informed decisions consistently over time and letting that compound interest work its magic.
I like it. Patience, consistency, and a well-diversified portfolio. It's like planting a tree. You've got to nurture it, give it time to grow.
That's a great analogy. And you know what's really fascinating? This whole idea of dividends got me thinking, what if you combined it with other forms of passive income, like creating and selling digital products or renting out assets you already own?
Ooh. Now that's interesting. It's like building multiple streams of income all working together, creating this, well, this financial ecosystem.
Exactly. It's about taking control of your financial future and building something that can support you for the long haul.
I love it.
Yeah.
This has given me a lot to think about, and I hope it's inspired our listeners to do the same. Thanks for another insightful deep dive.
Anytime. Always a pleasure to chat with you.